Hi, everybody. Welcome to Receivables Town Hall, and thank you for joining us today for our webinar. A few housekeeping notes before we get started. We'll be taking the questions at the end of the presentation, so please feel free to put them in the comment section on the right-hand side of your screen. We'll also be sending a copy of the recording post-event, so please do not forget to register. For our session today, I have product experts from HighRadius who will be sharing insights on how to solve credit risk mitigation challenges at the office of the CFO. So without any further ado, let's introduce you to our panel today. Our first expert is Neeraj Kumar, VP of Product at HighRadius, who's accompanied by Purna Chandra, who's working as Senior Product Manager at HighRadius. Let's begin with the introductions. Would you like to go first, Neeraj?
Thank you, Madhurima. I am the VP of Product at HighRadius. I look at the credit product. Prior to HighRadius, I've got 20 years of experience in various domains like fintech, HR tech, and retail. I have helped build companies, foreign exchange trading platform, commodities exchange, a payment gateway, omni-channel retail platform, and a job board in my past life.
Thank you so much for taking time today, Neeraj. We really appreciate it, and welcome to the show.
Thank you.
Moving on, Purna, I'd like to hear a little bit about your journey so far as well. So would you please like to introduce yourself to our viewers?
Right. First of all, thank you very much, Madhurima, for inviting Neeraj and me to this webinar. And, a quick introduction about me. I am Purna Chandra. I have, 8.5 years of work experience, mostly across the financial products, and I worked across, products ranging from, building products from the scratch to enterprise products like HighRadius credit product. And currently I'm working as a senior product manager at HighRadius, and I'm currently working on the credit product.
Thank you for those introductions. Now we'd like to get started with the presentation, and everybody should now be able to see a screen coming up, which Neeraj is sharing. So over to you, Neeraj.
I'll take you today in this webinar through the challenges faced by current organizations in their credit management processes. I'll tell you why this has become so imperative to look at the current processes as they exist and how to solve them, and what are the benefits organizations can derive to the change in these processes. So coming to the current challenges that organizations face, right? If you look at the current processes, most of the organizations follow a manual processes right from the onboarding of customers itself. So currently, most organizations use email and fax to get data from these buyers. What it does is that it creates a lot of unreliableness in this credit risk process, plus it adds to the timelines. Apart from that, the very manual nature of this process makes sure that a lot of individual biases creep into the credit risk assessment process itself. Apart from that, we are not able to mediate in a system agnostic way between the various conflicting interests of the sales versus the finance team, for instance, right? So in effect, what happens is the whole process becomes A, unreliable, B, it takes way more time than it should, and it creates a very bad experience for our customers. How do we go about solving it? The whole problem can be looked at differently and be solved through the process of simplifying and automating the individual parts of this credit risk assessment process. A, we can digitize the customer onboarding process itself. So no more of those emails and faxes, bye-bye to them. Instead of, one-off credit risk assessments, we can have an automated credit risk assessment process, which can run on an ongoing basis for you. We can automate the management of blocked orders by introducing artificial intelligence-based systems. And we can also provide a 360-degree view to our clients of their own customers. In effect, what it would do is automate, digitize, and simplify the entire process for you. But the question comes to my mind is, why now? Today's post-pandemic world has made it imperative for all our credit risk departments to take a good hard look at their processes. While the post-pandemic world has created a great economic opportunity, a growth opportunity. And if you look at the report by National Center for Middle Markets, published in 2021, what we have found is 39% of the organizations are looking at newer domestic markets, and a good 55% of the companies are trying to introduce new offerings to their customers. So while this post-pandemic world brings a lot of opportunities, it also is a very uncertain environment. Today, we all are aware inflation is rising rapidly, and with it will come a higher interest rate regime. A higher interest rate regime with uncertainty in the supply chain management itself, plus all the socio-political upheavals like today, the geopolitical wars that we are seeing around the world will create its own pressures on the businesses, leading to possibly more insolvency. So it becomes tougher and tougher for organizations to assess the credit risk of a particular customer in an ongoing basis, right? So today, it has become really, really imperative for us to change the way we look at credit risk management at our organizations and change the way we handle it. If we automate, digitize, and simplify the entire process, it brings these 4 benefits to our organizations. Improves bottom line, better compliances for you, increases the efficiency and the productivity. So a real-time credit risk management will lower your bad debt. It will also give you alerts on a proactive basis to better handle the credit risks of particular customers. It can also use artificial intelligence to assess payment patterns and to predict which orders need to be blocked, which shouldn't be. In all, it all will lead to a better bottom line and improved revenues. It will also lead to increased efficiencies in your organization. As per a case study by J.J. Keller and Associates, we have witnessed a 50% reduction in credit review times through faster onboarding and accurate assessment of customer credit reports and auto scoring of customer credit risk, and streamlining the internal communications inside the customer organization itself. Apart from that, centralized repository of data also brings us a single point view of the entire process and gives us an opportunity to be better able to comply through various regulations. And most of all, it leads to enhanced productivity at your organization. We have, for instance, a case study with Hackett Group where we were able to reduce the customer onboarding time by as much as 67%. So in all, it's a great deal to relook at everything and move towards more automation and simplification of the credit risk process.
Thank you so much, Neeraj, for walking us through the reasons why people should start looking at credit risk management from an automation standpoint. And to further this and discuss it in more detail, I'll now have Poorna join us. And Poorna will walk us through the processes that you can automate to put your credit risk mitigation on autopilot. And the key highlights would be understanding how you can put your customer onboarding, credit risk monitoring, predicting your blocked orders, making effective decisions, and reassessing your customers' risk from time to time on autopilot. So over to you, Poorna. Please go ahead.
All right. Yeah. Thank you very much, Madhurima. Maybe go to the next slide, please. Right. Yeah. So talking about, to start off with, onboarding your new customers. So as Neeraj was, rightly mentioning it. So there are like plenty of organizations which are still doing this, customer onboarding completely manually. So this process, would need, would require manual forms wherein, your prospective customers would have to fill in this information and then send it to your credit team, and they would have to, enter all this information either into your ERP or some equivalent system. And, it requires lots of manual efforts. So HighRadius has come up with a solution called online credit application, which can be used in 3 different ways. If you are already having a website, this online credit application can be completely embedded into your system, number 1. Number 2 is, let's say you already have an online form. And we have APIs which can be directly integrated with that credit application, and it can extract information what all is provided by your customers, and it can be given to your credit team for assessment. So it becomes relatively easier for your credit team. And number 3 is you can create new URLs, new web pages for online credit application, and you can send across this online credit application URLs to all your prospective customers and to your sales teams also. And when I quote it as online credit application, it need not just for onboarding your new customers. It can also be very well. So we have something called as multi-review online credit applications, wherein you can do all sorts of let's say a credit limit utilization or an existing credit review. Credit review on your existing customers. So all these can be pretty much supported on online credit application. And also one more very important feature here is that, so let's say all these online credit applications for your new prospective customers need not be always filled by your customers. So they can be initiated by your sales team, and they can fill in all the information that they are aware of, and then whatever the the mandatory information that only your customer, the prospective customer would be aware of, they can your sales team can just quick save this application and send it across to your prospective client. So it absolutely reduces the manual effort, number 1, and the turnaround time for you also to respond on this particular application. And here, if you look at it, so there are plenty of tabs like general information, bank and trade reference, and various data fields. So all of these are absolutely customizable as per the customer's requirements. And moving ahead, so let's say most of your customers might not have information at the agency level. So they might send you financial reports, probably over email, or send you as an attachment. So in that case, let's say if a financial report has, let's say 200 pages, wherein the relevant information for you might not be, not more than like 5 to 10 pages to analyze and, to do a credit assessment. So what our AI model does is it can actually select what all are the relevant pages. It can select what all are the relevant pages, and accordingly, it can extract information using OCR techniques, and all this information can be passed on to your HighRadius credit cloud product, and it can be absolutely given in a consumable way to your customers, so that to your credit team, so that it becomes absolutely easy for them to analyze this particular information. Moving ahead, real-time credit risk monitoring. So of late, in the last 2 to 3 years, we have seen that post-pandemic and post the Ukraine-Russia war, the markets and the organizations have become pretty volatile. You never know that what's going to happen, which company is going to file a bankruptcy tomorrow, and which company might be banned tomorrow. And let's say you have 200 odd customers. So manually, verifying or analyzing or reviewing each of, or monitoring monitoring each of your customer is next to impossible. In case you have like so many customers. So that's where the RTCRM, real-time credit risk monitoring, comes into picture. So let's say if one of my customers file for a bankruptcy. So an a workflow can be automatically created and get added to my work list, so that my credit team will be notified about it and they can take an action immediately on that. And just to take this one step further, just trying to automate it further, let's say I do not even wanted that wait time where wherein my credit team has to go through this particular customer again, reassess them. So I can absolutely make automate this particular process also, and wherein let's say if I receive a bankruptcy alert on a particular customer, then I can change their credit limit to 0, so that no further orders can be entertained until until my credit team takes an action on that. So this process also can be absolutely automated. And moving to the next one, higher confidence in decision making. So let's say if you are, if one of your prospective customers asks for a very high credit limit, or there is a high risk customer, so you assess all these customers when they are coming to you for the first time. But in such a post-pandemic era, you would have to approve, or rather, you would need multiple people to approve this particular request. So let's say in this particular example, here I'm seeing that, for credit limits, which are more than $100,000, in such scenarios, I can use a user group, a group approval. So let's say there are 5 levels of approvers. And in that, in level 3, I can have 5 different approvers who can approve this. And out of these 5, I can make one of them a mandatory approver. So essentially what I'm trying to do is that I'm making sure that, there are more people from my credit team who will assess this particular request and then take an action. So more number of people reviewing it, it's absolutely a better decision for me. Right. And moving to the next one, periodic reviews automatically, triggers to reassess customers' credit risk. So, just reiterating the earlier point, post-pandemic, you never know, which customer, what's going to happen with each of this customer. So let's say with regards to high risk, customers, or wherein, there is high valued credit limit given to a particular customer. So in such cases, you can absolutely have a periodic review wherein, let's say, for example, taking the earlier example itself, let's say for all the customers who have a credit limit which is equal to or more than $100,000. So I can absolutely have a periodic review initiated for them once in every 6 months, so that I can make sure that, this is, all these customers are taken care and reassessed every 6 months periodically, so that I can actually reduce my risk. And this complete process is absolutely automated. And the 5th process that I want to call out here is proactively predicting orders. So this is one of the absolute features that you should be automating. So let's say in the next 3 days, what are the kind of orders that your customers would receive? So at the end of the day, all the orders that you would receive, you would have to serve your customer. Like you do not want to have any sort of a delay in serving your customer. So what HighRadius product can do is that we can predict what will be the orders that you would receive in the next few days. So let's say in this particular example, so here the predicted amount is 2,000. So what could be the exposure after this new order? So this can also be calculated and given upfront to you, so that you need not wait for this order to receive in the next 3 days. Then your credit team doing an assessment on that, and then you trying to doing an assessment again onto them, and then taking a decision. So you can actually avoid all this wait time, and instead take the decision upfront, so that you can avoid getting an order blocked. And not just with predicting blocked orders, we also support something called as the recommendation of blocked orders. Let's say today I have 5 blocked orders. 5 orders which got blocked. So what is the action that needs to be taken by a credit analyst or credit manager for that matter? So let's say the first 3 customers, they are very good at repayments. They have been repaying right on time. So I can, I can give a recommendation saying that, you can go ahead and release this order, or, their business has been growing organically. So you can, go ahead and increase their credit limit, so that, the orders do not get blocked, and the customer is a good repaying master. And on the other hand, let's say the other 2 customers of you are not, they have been consistently delaying your payments. So in that case, we can probably, give you a recommendation stating that go ahead and ask for a repayment for this from this customer, so that, you need not get into a bigger risk. So these are the kind of recommendations also that we absolutely provide. And just to summarize here, these are the 5 processes that should be absolutely automated by any credit team that is doing business. And not just these 5 processes, there are so many additional features and additional processes that we have automated in HighRadius product. So if you wanted to have a quick demo of it, you can go to HighRadius.com website and book a demo there. And with this, I would hand over to the control to Madhurima.
Thank you, Purna. Thank you for walking us through the 5 features that any company today should automate. And for that reason, we have HighRadius SaaS product for you. We are order to cash and AR transformation leaders, and we currently have more than 600 customers across the globe. We are 3,000 employees strong and have over 450 million in growth funding. We were recently actually marked as leaders in the first ever Magic Quadrant that Gartner released. That was just a couple of days ago, so very proud of that. HighRadius started its journey in 2006, where we were offering on-premise solutions. And over the years, we've moved to cloud solutions, then started building solutions that use artificial intelligence. We received strategic investments in 2017 and also in 2020 and 2021. And in 2021, we were actually evaluated at $3.1 billion valuation by our partners who invested in us. It was 2019 when we launched autonomous systems, and we believe that we are your autonomous software partners for the office of the CFO. And on those lines, we have 2 product lines that we offer for automating order to cash cycle in CFO's office. That's on the right hand side of the screen. So Radius One AR Suite is the mid-market first product. And we have another product called Integrated Receivables that offers end-to-end solutions to enterprises for automating their order to cash process. Next slide, please. On this slide, we have our esteemed customers written down here for your reference. We cater to customers across different industries with likes of P&G, GE, ASICS, Danone, and more. So if you would want to partner with us to improve your order to cash cycle, treasury, and even record to report solutions, then please do send out a demo request on www.highradius.com. Next slide, please. And I also want to highlight that from 25th April to 27th April, we are hosting the in-person conference for the Office of the CFO at Nissan Stadium, which is home of Tennessee Titans in Nashville. So if you're looking to find networking opportunities with 1,000 plus finance and accounting professionals, then this is the place you should be at. This will be 3 days of learning and fun. When I say learning, there will be 50 plus peer-led sessions, workshops, and panel discussions that any person working at the office of the CFO shouldn't miss. So please do register at radiance.highradius.com if you're interested. And if you have any questions on this, please do reach out to us as well. And on that note, we had questions come in at different points on the chat section. And I'm now going to take those questions for Neeraj and Purna. I think let's take a few questions with you first, Neeraj, if that's okay.
Sure, Madhurima.
All right. So the first question that we have is, can we integrate
a company's existing subscription to a credit agency to HighRadius? And if yes, how do you handle private companies' data, which are essentially the companies for whom we do not have information present on the agencies?
Great. I mean, yes, we are in luck there. We can continue using those credit agencies' data through HighRadius itself. And to answer the second part of your question, any companies, any private companies for which these credit agency data are not available, we can upload those data through our self-service OCA form through an attachment. Plus, if you want, you can even send it across in an email.
And OCA here is the online credit application. That's
Yes.
right.
Right. Yeah. Just to add a point to that, Madhurima. So, not just with your existing partnerships that you have with the agencies, you can very well have, agency integrations with multiple agencies at the same time. So let's say you have 5 agencies, depending upon your requirement for a particular customer, you can extract information from let's say 2 of your agencies. So all this is absolutely automated and absolutely possible.
The next question is, when documents expire and companies have to do a lot of back and forth because of it, is there any way to automate this process and the email and sync over these documents with existing ERPs and companies?
Yes, Madhurima. This whole process can be automated, and on various points of interventions, a template-based email will be sent out to the respective teams.
Great. Thanks for answering that, Neeraj. The third question is on order prediction that I see here. So one of our listeners has asked, can you please explain how order prediction works?
Right. So order prediction, if we have to predict, what are the kind of orders that one of your customer would be receiving, we would have to obviously, analyze the information of this particular customer in the past. So for that purpose, we would need at least 2 years of information, 2 years of order history of this particular customer and the repayment behavior, repayment history of this particular customer, so that we can, we can pretty much predict what could be the type of what could be the types of orders that this particular customer could place, and at which particular day, which particular order could be placed. So we can, absolutely predict orders in such a fashion.
Understood. Poorna, there's one more question. The order prediction that you were referring to, will the prediction happen only for only 3 days? Correct?
Right. Just to answer that question, so we have for credit product, we have different versions of it. So the enterprise product supports, let's say 3 days of order prediction. In case of autonomous, we support up to 30 days of order prediction, which means like in the next 30 days, what are the kind of orders that you'll be receiving for a particular customer that can be predicted. So 3 to 30 days is, is the kind of prediction that we'll be able to support.
Great. So that's all the time that we have for questions, folks. If you have certain other questions that you put on the comment section, we'll reach out to you one-on-one and answer those questions since we are at the top of the hour. So I'd like to thank you all for attending, and thank you, Poorna and Neeraj, for presenting today. And I wish all of you have a great day ahead.
Thank you. Thank you very much, everyone.
Thank you very much.